Welcome back, everyone. Hope you all had a great New Year's celebration last night, as well as a great Christmas holiday and break. But let's jump right into it. I missed everyone. I actually missed doing the podcast quite a bit. We continue to roll on and pick up new subscribers, as well as a ton of folks who took advantage of the 33% discount. So thank you for everyone that participated in that promotion. But yeah, just another Tuesday. But it's been kind of crazy in the news flow area. Sincere thoughts go out to those who are impacted by the earthquakes out in Japan, the flooding and the crazy weather out in California with the big waves and just houses being flooded. We even had a small mini earthquake here in New York by Astoria, which impacted some explosions on Roosevelt Island, which is like a small island in between Manhattan and Queens. So the news flow has been quite crazy everywhere. Planes hitting each other, but be safe out there. But let's try to stay positive here. It is a new year, 250 plus trading opportunities to do right by ourselves and our wealth. But let's jump right into the numbers today. So the complexion was kind of bearish, to be honest with you today. I will post a chart in the show notes that kind of expresses this. But looking at breadth, we had 213 new highs versus only 84 new lows. So that's bullish. New highs are outpacing new lows 3x. So that's fine and dandy. We had 35% of shares advancing versus 61% declining. 18% of shares are below its 50-day moving average, and 32% are below its 200-day moving average. Not horrible. The Dow closed right at the previous close. The Dow pretty much was up 25 points, so nothing burger there. The real story here is in the NASDAQ, which was down 1.63% or 245 points, and it was down all day. The S&P was down 0.5%, down 27 points, but the tech shares is where a lot of the damage was done. Now, it is the first trading day of the year. Some will say, hey, this is just profit taking. Everyone just basically waited till 2024, so it doesn't have any income tax repercussions, and they don't have to report these gains till 2025. Could be. But I'm just letting you know what performed and what underperformed. So technology led to the downside in the sector analysis. It was down 2.7%, which is fairly big. The one-day performance of healthcare was the strongest, up 1.25%. Utilities are up 1%. Consumer defense up 0.86%. So the tech-heavy sell-off was the story today, and that leads me to kind of go through the charts of the Magnificent Seven. So if you take a look at Apple, Apple was downgraded by Barclays, and they were down 3.63%. It's literally sitting on the 50-day moving average, but the 200-day is not far away at like around 180. So we can certainly test 180, the 200-day moving average, as well as this longer-term trend line that goes back to 2003. And if that breaks, we could be going down a little bit further here, or a lot further here, if that trend line breaks down. Amazon, we're still above the 50-day moving average, but some selling pressure obviously after a day like today. Alphabet is also above its 50-day moving average. Nothing really to worry about here. It's still near lifetime highs. Meta, same thing, above its 50-day moving average, near lifetime highs. Microsoft, just above its 50-day, near lifetime highs. And Nvidia, above the 50-day moving average, also near lifetime highs. And then, before I forget, Tesla obviously is also above its 50-day. Maybe not near its lifetime highs, but I wouldn't be worried unless Tesla breaks below its 50 and 200, which are like right next to each other. If it breaks down below the 200-day, I can actually see this going down to $200 pretty quickly from here, from 248. And if the $200 level doesn't hold, then we can go revisit 160. So be careful on Tesla. It looks like right now it's okay, but there are some risks here. A lot of noise about the Cybertruck and potentially orders, people who ordered it are backing out, and then there's some pressure with BYD, the Chinese EV maker, outselling Tesla in China. The other thing I want to point out here is that the 10-year yield is trying to bounce. We're very close to 4% on the 10-year yield. We're at 3.93. So I think the fate of this rally from Santa Claus really is hinged and dependent on where the 10-year yield goes, whether we're going to continue south. Maybe we'll bounce like 4.2 and then sell off on the 10-year yield and go down to like 3.5 to 3, and then just break that level and keep going south to 2.5. Or are we going to revisit the highs of 5% on the 10-year? I think that it's a very binary thing to watch, but with so much debt, whether it's consumer, the Fed, the government debt, corporate debt, yields matter. So watch that like a hawk. And, to put this in context, since the December 13 Fed pivot kind of news, the S&P futures have already gave up or retraced back 50% of its rally. So from the December 13th Fed pivot day, we were just at 4,700 on the ES futures. We rallied viciously to the end of the year to 48.41. And today we're back at 47.60-ish. So we've already lost half of that momentum already. So that's not good. That's something to watch out for. What was strong today? Volatility was strong. I told you guys going into the end of the year, volatility, or the VIX at 13, in my eyes, is in essence zero. Whether it's 13, 10, 9, 4, it's all the same to me, because VIX cannot be suppressed forever. Then you had shares of Las Vegas Sands up 4.3%. AbbVie was up 3.1%. Instacart was up 2.39%. And then the 10-year yield itself was up 2% today. What was weak? There was a laundry list. I'm just going to rapid fire, okay? VinFast Autos, that SPAC IPO from last year, down 15.77%. Rivian, the EV truck maker, down 10%. Coinbase, down 9.8%. ARM Holdings, down 8.28%. Lyft, down 7.9%. Carvana, down 7.69%. You had MongoDB, down 6.15%. Roblox, the video game company that apparently every child is addicted to, down 5.97%. Shopify, down 5.22%. Uber, down 5.18%. Affirm Holdings, down 5.17%. Kava Group down 4.9%. DraftKings down 4.7%. Wayfair down 4.7%. Sprout Social down 4.28%. You get the drift. A ton of risk type stocks were down pretty big today. So that's another thing to watch. I wanted to just wrap up today. I won't go on too long today, but keep watching the Magnificent Seven. Keep watching yields as well as inflationary signals like gold, oil, copper. And I had posted during the break a post about the bomb after the bomb, looking at the yen carry trade as well as just yields in general. And I have a thesis that potentially this year in 2024, we are going to see a decoupling of yields and the US dollar, because since COVID, they've been trading in lockstep together. But if you take a look at the history of it, it wasn't always the case. So if that happens, we might be in for a roller coaster of a year. That's something to watch for as well. So with that, welcome to 2024. I will see you guys after the Wednesday session. See you guys later.